Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Tim Stenovec and Static. We welcome our audiences across Bloomberg Radio, Bloomberg Television, as well as on YouTube and Quick Take. Carol Massar, I love you. It's another wild day here in the markets, wild week in the markets, but second straight week of gains for the S&P.
Did you guys hear that, Static? I hear something. Yeah, pretty remarkable and how dramatic, right? The run-ups that we've seen in equities and pretty broad-based. Did you see the VIX? It's down about 1.5 points today. It's just below 26, so it's just amazing the complacency that we see.
Michael Sheldon over at Hightower RDM Financial Group just gave us an interesting technical. He pointed out that it's an encouraging sign that the Dow, the Dow, I don't know what you think, Romaine, is above its 200-day moving average, okay? It's encouraging, but it's still too early to say that we're out of the woods. You know, we can't point to the S&P 500 doing the same thing.
Although, Romaine, I'm going to nitpick with you a bit. You said, we're on pace for the best month ever for the Dow?
I thought I heard that somewhere.
At the most, we're up the most since 1976.
Is he wrong?
But we're going to be up 24% to get to 1938.
Is he wrong, Karen?
In the month of June 1938.
Okay.
Wait,
still a ways to go.
Wait, are you wrong?
No.
No, I'm
No,
static
it's not possible, is it?
The terminal
What's
is
happened?
incorrect.
Up is down, down is up.
Wow.
Wow.
You know,
Anyway,
I have some
it's a
humble
topsy-turvy
pie.
world out there. This apparently is now the world where everyone seems to think there are maybe bargains to be had. There's a lot of people that pointed out, though, when you look at sort of the levels that we're at here on the market, this is still a little bit of a range-bound market, but I think a lot of people will take it. A 5% gain last week on the S&P 500. Looks like we're going to get a weekly gain this week of roughly 4%. That's on the back of a 2.5% gain on this Friday. 93, 94 points higher on the S&P 500. The Dow Jones Industrial Average up more than 800 points, or 2.6%, while the NASDAQ Composite is going to close higher by more than 300 points, or 2.9%. Meanwhile, a lot of those cyclical names that we've been talking about, the Russell 2000, up 2.2% here on the day.
Guys, worst performing name in the S&P 500 this week.
Amazon.
Which one?
Meta.
Yeah, absolutely. Right, down about 24%. All right, S&P 500, though, Taylor, really broad-based buying in today's session. 453 names to the upside, 49 lower, 1 unchanged.
Take a look at where we're on the sector level, Carol, because it is a broad-based rally indeed. For some of the winners, I mean, this is wild. Technology, hardware, and semiconductors are up 4.5 to 6.5% on the day alone. You're getting also software and services that are also up 3%. Again, if we talked about the quarterly earnings season within big tech, and then you look at this price action, you may not believe it, but there it is. Take a look at the worst performers. There is a lot of green on the screen, Carol, even in, quote, those worst performers, but it has some inflationary aspects to it, some food and staples, some of the pharmaceuticals, the transportation index, energy, and then all the way down at the bottom, the only sector in the red is the retailers. They're off 2.4%.
All right, good check on those broad-based groups. Let's get to some of the individual gainers in today's session. Got to talk about Apple, right? That was certainly the standout in earnings last night, and that stock up at its highs almost 13%, finishing the day with about a gain of about 7.6%. We talk about the influence that this has had on the markets. It's 7% of the S&P, 14% of the NASDAQ 100. We did know the big headlines, revenue, profit beat estimates, and that's despite iPhone and services being soft. So nonetheless, really some outperformance there. Intel also outperformance, and that really pushed the Philadelphia Semiconductor Index higher as well. Intel top in the NASDAQ 100 and the S&P 500 today, up about 11%. So holding on to most of the day's gains in today's trade. Love the investments. Beat analyst estimates, and third quarter sales growing 8%. Monthly active users also grew slightly. So all of those social media platforms struggling, and yet they were able to grow.
That's because everybody's jumping off Twitter and moving to Pinterest.
I've already
migrated over there.
It's probably a healthier place for all of us. Maybe we should all spend a little more time over there.
Yeah, it's all like wedding dresses and bows.
Exactly. All right, I'll try to talk about Amazon now because we got to talk about that as our biggest decliner, at least in the S&P 500. Certainly weighing it down 6.8% on a points basis. The company spooked investors by forecasting its slowest ever holiday quarter growth. Third quarter results indicated weakness in its AWS cloud computing business as well. Also, some real underperformance when it came to healthcare today. Edwards Lifesciences Corp falling by 18% today, slumping the most since 2013. The company, it makes blood vessel valve replacement. It cut its annual profit forecast, citing shortfalls in U.S. hospital staffing and other factors that hurt utilization. And then DaVita Healthcare, the dialysis company, falling 27% today, plunging the most since 2000. They cut its EPS guidance for the full year. It posted earnings results for the third quarter that came up quite short.
Meanwhile, also coming up short on the day is the oil market, but largely that's a issue because the dollar is stronger on the day. Now, trying to pass what's happening in overall markets at the moment, we're looking more at perhaps economic data on the day, the fact that we've still got a strong PCE, we've still got a strong economic labor cost index, we've still got basically a strong kind of signal from the US economy, and therefore the bond market reacts to that. But in terms of commodities, they cues off the US dollar strengthening and oil pulls back, but it's actually up on the week. And that's as we saw record exports, as we see, of course, still continuing issues in terms of production. So we're seeing actually a pull down in certain other of the metals as well. Zinc, steel, iron ore were all on the downside. Not lead, though, as Romain was teaching us a little bit earlier, lead having a stellar day. I'm looking at the FX pairs, therefore, as we see that strong US dollar. It really is.
Lead is the future.
Lead's the future.
Yeah,
Old
big
as
tech
new.
is over.
I thought it was plastics.
Yeah, plastics.
Are those
Where's
plastics?
Bloomberg lead when you need it? Meanwhile, British pound strengthening 0.4%, the only major pair up against the US dollar. Everyone else is sinking. Aussie dollar weakening by 0.6%. Canadian dollar, the loonie is weaker, as we see, of course, that reflecting the oil market on the day. Sovereign bonds, money moving out of bonds, particularly in Europe, in Portugal, Germany, France, all yields higher, and feels a similar move that happened in the US, Taylor.
Indeed, Caroline. Take a look at where we are for bond yields. Yields are up 13 basis points to 440. 10-year yields are up 8 basis points, trying to hold on to 4%, 3.999. Romain, as we've been mentioning, I mean, yields higher like this, to this magnitude of 8, 9, 10, 11 basis points, typically would shock us. But we have really just sort of recovered the range-bound area that we've already been in. So unfortunately, we're getting used to these kinds of moves. And again, still looking at this range-bound of about 4%, and this is where we've been.
And this is for the day, because on the week, right, yields are slightly lower, right? I mean, we're down like 7, 10. I mean, the 10-year is down, like 20 basis points. But I think the move around, and you talk about the range-bound nature of this, I think it kind of highlights the idea that there is a lot of indecisiveness in this market, or at least a bifurcation of that decisiveness, the idea of where we're going next.
Yeah, well, we're going to find out, right? We've got a Fed meeting next week. I feel like it's another jam-packed next of stuff coming at us.
Yeah, it's going to be busier next week than it was this week.
Everyone keeps talking about
Quarterly earnings.
Fed meeting, right? Jobs report, and then healthcare companies, a lot of things coming our way.
Okay, so 75 basis points is pretty much what people expect the Fed to say on Wednesday, but then we turn our attention to December, Caroline, and try to get an understanding for what's going to happen there. Vince Signorella from the Macro Squawk desk joined us a little earlier in the program, and he made the argument that the Fed really needs to slow down. And he said, I'm not saying that they should do anything, they should do nothing in December, but he argues that they got to give it time to let this hit the economy.
Yeah, the fact that we, of course, are delayed in nature. But what's already being signaled by some of the CEOs that are foretelling the fact that we're already heading towards a recession, the fact that Amazon just pointed us towards a slower consumer. We have micro bits of data, the housing market that makes us be concerned. But in general, this is a market that seems to still bear strong. And the fact that central banks around the world are having to still fend off inflation that's just way too high.
Yeah, and in addition to what we get and what we hear out of Powell, too, I do think the earnings still matter. I mean, obviously, the level of companies with regards to size, not quite what we got this week, but I think just the breadth of industries that they cover and the different corners of the economy, maybe it's sort of that jigsaw puzzle finally comes together and we get a better picture of the economy in full.
I think so, too, especially when you think about Uber, and then I think Lyft is later. We think not only about the gig economy, but the reopening trade, what a bellwether that has been, the ability for the consumer to spend or not. We'll have some car stuff sprinkled in there as well.
And don't forget, you get like the Zillows and Open Doors, which of course have been hit hard. You get the Airbnbs of the world. We get a read on travel, things like that as well.
But don't you think I think what you said too, Taylor, about the reopening economy, like look at the airlines, how well they did with their earnings. Like people are doing different things. Maybe they're not buying so much stuff from Amazon or, kind of pulling back in some of the traditional buying that they did during the pandemic and getting out there, right? And maybe that's why we've seen those airlines.
To the point, we had Hertz yesterday, the CEO of Hertz, and he said he Romy didn't see a single signal from what he's seeing in his business that we're slowing down in any way. To your point, we're deciding to have experiences rather than buy the ultimate Halloween costume to move them all
And
on our Amazon.
Caroline, you tweeted out a great comment. What did the Intel CEO say in the press release?
Nothing good to see in the economy.
Good economic science. It really does paint a different picture.
How did we get through this and not talk about Tom and Giselle?
I know. I don't want to talk about it.
It's among the most read stories on the Bloomberg.
Romaine, are you up to date?
I'm not. Did something happen? Did he win another Super Bowl? Or did she win another Super Bowl?
No.
Romaine.
Oh, okay.
All right,
I'm
anyway.
not here.
That's a wrap. Guys, have a great, well, it's not Halloween till
I like
Monday, right?
Giselle. She's cool.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.